you? Vernon doesn't ever return my phone call.
I told her to call you.
I'm trying to find out how she's going to do the bid tax.
I'm sure that's why she didn't return her phone call.
I'm sorry?
That's why she didn't return her phone call.
I don't know. So I would think that there's some kind of a plan. I hope she's going to check Ridgewood Avenue as well.
Yeah, I know they did a random sample, so I'm sure it's not. Anywhere.
The Truth with Gwen Azama-Edwards, every Thursday at 6:15 on Goliath Radio. Gwen Azama-Edwards, retired city clerk, former city commissioner, city of Daytona Beach. The Truth with Gwen Azama-Edwards on Goliath Radio.
You don't look very retired.
I didn't want a contract, so I just, you know.
Yeah, retired.
Stan, you've been sitting much too long, much too long. Welcome, 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 welcome to Truth, a radio program designed with you in mind, a program whose sole purpose is to empower you, our listeners, for information leads to knowledge, and knowledge is power. Didn't have the mic quite working in the beginning, so I'll say welcome again to Truth, a radio program designed with you in mind, a program whose sole purpose is to empower you, our listeners, for information leads to knowledge, and knowledge is, you got it, power. And as always, I want to empower you to take control of your life, those things that impact you, your family, and your community. As always, too, I want you to go to the website at www.gwen-truth.com so you can access all of those all-powerful links that will link you to the information that gives you what? Power. Power, for that is what we're about. Also go there so you can chime in on the poll that we have going, which is asking you about Obamacare. And we're going to get into a little of that tonight as well. I do want to say, as has been stated, I'm Gwen Azama-Edwards, former city commissioner, retired city clerk, city of Daytona Beach, author, minister, community volunteer, and that is really what keeps me super, super busy. Love it, love it, love it these days. Want to announce, I'm sure you've heard, Nelson Mandela died today, and he was a great man, an awesome man who fought for what he believed in, was willing to, when we say fight, you know, not fisticuffs and all that kind of stuff. He stood up for what he believed in, and as you know, served years in prison for that, and came back to find what he was fighting for, see it come to fruition. He did die today after a valiant battle and fight for life, So shout out to his family, shout out to his memory. Again, Nelson Mandela, who has passed today. And I want to do a real quick shout out to my campaign son. He helped me in my campaigns, and he is graduating next weekend. So I just want to say to him that I'm so proud of him, and that's Larry Williams, Bethune-Cookman University student who will be graduating in December. He graduates next Saturday, the 14th. And so shout out to him. Love you, love you, love you. God bless you. And I'm going to be right there. Okay, because we have a short night, we're going to get right into our program. And you guys, I'm sure those of you who've been listeners with the Truth Radio Show over the years, you know that this lady I bring on, especially at the end of the year, because she's a CPA and because she's also partnered with James Moore and Company. And manages and, you know, does the whole gamut. And she has been around in this community, and they, as I always say, James Moore and Company, they're a community partner. They always do such great and wonderful things in helping organizations, but they're a great company too in terms of accounting. She also is past president of the Halifax Area Chamber of Commerce. And I told her, because our night has been shortened, that I'm going to do my best. I know you guys saying, oh, she can't do it. She can't keep her mouth shut. But I am going to try and do my best to really chill tonight and just listen to what it is that, that Suzanne Forbes has to say. And she is, again, the guest for tonight, CPA partner James Moore and Company. And as I've kind of set the stage for you, Suzanne, basically we do want you to share with us in terms of Obamacare, because last year when you were on, you were and the year before, we were just touching a little bit on it because we were always waiting. You were always saying waiting for the regs to come out and this, that, and the other. And we're kind of a similar situation because of issues and problems and the like. You said, oh yeah, I thought you weren't going to talk much. Okay, so if you could cover that. And I wanted to say too that there's a lot to all of this, as you all know. So what she's going to be doing is really kind of giving you the tip of the iceberg and allowing you some information so you can go and check further. But I love having you on, and happy holidays to you. In case I forget to say it before we go off, welcome, Suzanne.
Well, thank you. I'm so glad to be here. I don't know how many times. This is probably our 4th year together.
Yeah.
I think. It seems like it. Every year, close to the end of the year. And I always feel bad when I come in because I'm always either have bad news, I'm not necessarily great, not really sure what we, don't have definite answers. And I think last year when we talked, you're right, when we talked about Obamacare, a lot of people, we didn't know. Mm-hmm. And it wasn't, if you remember back, I think it wasn't until June when the Supreme Court ruled and kind of said, yes, it is legal. And everybody kind of until then was kind of waiting around to see what was going to happen with the Supreme. And I can tell you when that Supreme Court ruling came out, our phones started ringing. Everybody was like, okay, we got to get serious. We need to pay attention to this now. Mm-hmm. And so everybody started, and so the businesses, they started wondering, okay, what's our impact? Individuals, what our impact is. So we started with that process thinking that there's a couple of major pieces of legislation that were coming to effect for 2013. Most of the legislation that came into effect from the Health Care Act, Obamacare, some of it started in 2010, the small business health care tax credits and some of the reporting requirements. So that stuff was there. What we saw happen was in this year was we had, for 2013, we had a health care tax get implemented. And that is a 3.8% tax on a high wealth. It would be for married couples making more than $250,000, and for singles, $200,000. So there is a marriage penalty because if you're single, it's $200,000. If you're married, it's $250,000. It's not $400,000. It's not double. So that did come into effect in 2013. So we are beginning to start dealing with that with this filing season. I can tell you those regulations are still being written. We are getting every day new and new regulations on what the definition of investment income for that tax. Generally what it means is that if you happen to have a large dividend income, interest income, or a capital gain, and there was some misperception out there that, oh, I sell my house and it's $250,000, I'm gonna have to pay this 3.8%. That's not true. The tax is on your net capital gain. So you would, and taxable, so you reduce it by the cost basis. So if you sold a home for, and I'm going to say this is not a personal residence, let's say it's a second home or a rental property, you sell it for $250,000 and you bought it at the height of the market and you had a loss on it, you're not going to pay tax on that portion, this 3.8%. But you will pay it if you have an overall gain. This is a pretty big issue for companies or clients that have a lot of real estate because they produce those type of gains, large capital gains. So we are seeing a definite impact. So we had the 3.8%. We also had a 0.9% additional tax on income if you had a W-2 earned income, payroll wages in excess of $250,000 for married or $200,000. Those taxes we talked about last year, they're there. We're still interpreting them. Those people that may be impacted, and a lot of us say, I wish I was impacted. That would be a good thing if that was my wages. But for those that the others are saying that while their income is there, they're getting hit with a multitude of new taxes. That's just one of them, as well as higher tax brackets, as well as phase outs of deductions. And so their marginal rates, what we're seeing for some high income individuals is that this year they are paying about 10% more in taxes than they paid on the same identical income in 2013 than they would have paid in 2012.
Oh,
So it's
make a note of
substantial.
that.
It is substantial. I mean, it is definitely impacting people.
Mm-hmm.
So we knew that was going to happen in 2013. What was supposed to happen in 2014 was that businesses were mandated to start providing health insurance if they had more than 50 full-time equivalent employees. And I don't really understand the legislation, why. I think it was some bargaining, I think it was some negotiations, but that requirement got delayed a year. So that requirement for businesses does not get kicked in until 2015. So if you are employed by a business that has more than 50 employees and they aren't providing you health insurance, they're not going to be required to in 2014, or at least they won't be penalized for not doing it. So that actually got delayed until 2015. The other part of that equation is, okay, well, my employer doesn't provide me health insurance, so I have an individual mandate to go get health insurance.
Yeah.
So that did not get delayed. I really, if I were a vetting person, would have thought that because they delayed it for businesses, they would have delayed it for the individuals. They did not. The individual mandate is still there. So that's what you're hearing about in the news now. The individuals, if you are not providing health insurance through your employer, or you already don't have a policy, or you're on Medicaid or Medicare, you have to go on and apply for health insurance. And right now, you can go various ways. I mean, you can get with an insurance agent and do that, but you can also do it through the healthcare website. Now, we all probably are aware at this point the healthcare website didn't work very well. It got overwhelmed. There was a lot of problems, and we did not see the enrollment that we expected to see on the healthcare website. What's important to realize is that anytime you have uncertainty, nobody really knows what's going to happen, that is going to raise prices for insurance. Insurance is a risk vehicle. It's meant to secure, to minimize risk. So the insurance companies, because they don't know how many people are going to enroll, the premise behind the Obamacare Act is that we get all Americans to enroll. And we have the healthy ones enrolled as we have the people that need the medical care, the ones that maybe are using the services, and that we all pay for it equally. So that there is so you have some people that don't need the insurance that are still paying for it, and you have those that are needing it that now can afford it because they're not having to pay the full burden of the insurance because we've got a big pool, everybody's pooled in together. Well, because of the problems, whether it is because people just didn't want to get behind the Healthcare Act, or if because of the problems with the website, we're not seeing the enrollment, which means the insurance companies are sitting over here and they're not seeing the healthy Americans enroll. So what are they saying? Ooh, our claims expense is going to go up.
Bottom line,
our liability is going up. It's going to cost us money. And right or wrong, our insurance companies are in business for their stockholders, for their members, whether they're mutual, whether they're a private company, even if they're a nonprofit healthcare company, they still got to be able to break even. I mean, they've got to be able to
look at the bottom line.
They look at the bottom line and the risk, and they say, I do not know what's going to happen. We're not getting the enrollment. Who's enrolling? The people that need the health insurance. They're the ones that are enrolling. What is the premium they pay versus their claims? We know the ratio is going to be upside down. We know that they're going to pay more in claims than they are going to pay in premium, or they wouldn't be getting the health insurance. That's why the healthy people that aren't paying claims aren't. So insurance companies sat back, looked at this, and what did they do? They have no choice but to increase their rates. That's what we're dealing with now. Premium increases, incredible in premium increases. Is that going to settle down? I don't have a crystal ball anymore, but I think it will take years for it to, if it ever comes back, I'm not an insurance industry expert. I understand risk, I understand risk assessment, and when we throw this uncertainty in there, they just don't know. So what does that mean to your listeners, the consumers out there? They're going to pay higher premiums. Whether they're going to be able to get the insurance, can they afford it? What is the average all increase? That still remains to be seen. We don't know those answers yet. But they are required to enroll in healthcare by January 1st. and the website's up working. I looked right before I came in. I went online to check and see. I think they said in the first, we were 5 days in December, they did have close to 30,000 people enroll. That's more than they had for the whole month of October. We're running out of time though. I mean, I think they said if they're not enrolled by, I want to say December 15th, that is going to be very difficult to get that insurance in place.
By the first of the year.
By the first of the year.
Even though, didn't they allow them though to enroll to have till March?
They did.
The president said, yeah, he did that without Congress. He went ahead and seeing the problems and the issues. But if they want to start by January 1, they do have to do it by a certain time in this month, December.
Right. And so, and I don't know, because the president did that, and the law says January 1st, does that mean they're going to, how are they going to rewrite these laws when they come, because now, when we get into filing tax returns in 2014, that's where the rubber meets the road, because that's where, as a tax professional, I've got to figure out whether or not our clients, the person who we're preparing these returns for, got the health insurance, what their premiums were, what their income is, should they get a credit, should they be paying more, should they be paying a penalty. Now, the penalties for not getting it right now are not as high as what the premium for the health insurance is going to cost. By design, they want to allow people, I think it's about a 3-year period, but after 3 years, it can be up to 3% of your income in penalties. People don't realize that. They just hear, oh, $95. What's $95 or 1%?
Right.
And then it keeps increasing, and it goes as high.
2 and then 3.
2 and 3. That can be a substantial amount of money when you somebody making $40,000. 3% is $1,200. That's a lot of money. How much is health insurance? Fortunately, the health insurance is probably going to cost you more than $1,200, and that's. Yeah, how do you, is it really enough of a penalty and an incentive to really get people out there to enroll if they are healthy and they don't need they in their minds don't need the insurance? I don't know. I'm concerned about that. So it is, as we're kind of going through what we're seeing over the next couple of months, we're really going to have to watch and see how the enrollment is. Those of you that are listening that have not, go back onto the website. Try it again. Meet with an insurance agent, because what the website does is give you parameters, and then they give you, they send your information for somebody to be able to help you with getting the insurance. I also understand that there is, and I don't know enough details about this, but there are incentives for insurance agents to sign people up, that they can actually get paid kind of a referral fee or a sign-up fee, or
I think they call them insurance brokers.
Brokers, right. And so there's a question about this whole market of people that are going to be out there trying to find people to get them signed up, because that's how they're going to make their money, and a pretty significant amount of money. And the salesmen, are they going to, how is that going to work? Are they really going to be able to get people signed up? Are they going to be signing up people and being honest, explaining to them what they're really getting into, because they're being compensated for the number of people that get signed up for the insurance.
Right. And I'm wondering if a person who has insurance, because they talk about the ones that are being dropped because they don't meet the minimum standards, those 12 things that they're saying they need to have in each policy minimum. But I'm wondering if they could start with, if there is an issue, start with their own current insurance company, because they have to be certified to be a broker to deal with it, right? Your insurance person may be a broker that's certified, but if they're not, then you have to go elsewhere. But it might be easier to talk to somebody that you're familiar with.
You should. You're absolutely, your first place to go is with your current insurance agent. Absolutely. I mean, they're the ones that they know you. They know your history. You have a live body to talk to. You have somebody. So the first thing you should try to do is to go to talk to your current insurance. And that was big news. Because what happened was they put a regulation on the insurance companies, and they said your policies have to meet these minimal essential benefits.
There are 12 of them, I think.
Right. And so what happened was, when a month or two ago, when the insurance company said, well, these policies don't meet these minimum essential benefits. Now, why didn't they? Because the individuals wanting the insurance didn't want to pay the premiums for a policy that did. And so they would go in and negotiate and say, well, what can you give me that I can afford? Can we increase my deductible? Can we increase coverage? Can we exclude maternity coverage? Can we exclude this? And so before the Obamacare, they could do that. They could write a policy for somebody that wanted to absorb some of the risk themselves. You know, I go back to one of my concerns is that back in the day, health insurance was supposed to be for catastrophic. You wanted the health insurance was to keep you from being financially ruined if you had a major catastrophic event.
Right.
And we have evolved from that. You think about it, people that have these policies where if you go to the doctor, you only pay $20. I'm sorry, going to a doctor for a regular checkup is not catastrophic. It is a routine, and in my opinion, it should be part of our life budgets to say we're going to have a certain amount of health care. I don't have dental coverage. I still go to the dentist. I'm going to go to the dentist. I'm going to go to the eye doctor. So what you think about what's happened with health insurance, it's not catastrophic anymore. It is, we don't want to incur very minimal exposure. We, as taxpayers, as citizens, we decided we don't want to take any risk on anymore for our health insurance or for medical bills. We want to be able to go to the doctor for $20, and we want to be able to have our prescriptions covered for the most part, and there's a cost to that. So what you've seen is that these health insurance policies are not catastrophic anymore. They really aren't meant where you only use them in the cases where you have a major catastrophic event. It's going to financially ruin you. Instead, now it's become more of a maintenance item. Now, that could be good because we're getting better health care because we go to the doctor for routine preventative maintenance. Right. That is the good side of it. That's the part of it that says, well, if people aren't going to go to get preventative care because they have to pay it out of their pocket, maybe if they're paying insurance or the employer's providing them insurance to get that preventative care, will be better off.
Yeah, and they're getting something. It's like car insurance. You pay for it, and the only time you really get to use it is if you're in an accident or something. I mean,
and then you don't dare want to make a claim.
You don't want to, you know. So this is, in fact, people say that. I may have heard you even say this, that insurance is something that you want to have and never have to use because
Absolutely.
you know your costs end up going up if you use it. And when you think about insurance now, you're paying for it, but you're going to get something for it because of all the free, no copay prevention types of things that you're going to get, like the mammograms and what is
routine checkups.
Yes, right.
And a lot of people still, even though they're free, they don't take advantage of them. They don't want to be inconvenienced, and so those benefits are there. But those cost. They're free, but they cost.
Yeah.
You have providers that are incurring expenses to provide that. Those routine, it costs money, and so our whole mindset related to health insurance is different. We want to make sure that everybody gets health care, that they get preventative health care, and it's wonderful to do that if we can get everybody to buy into the premise, the fact that preventative. Let's be preventative. But I went to one of the hospitals, and I went to a presentation that they were doing, and they were telling me the use of the emergency room, and it was amazing to me that I'm probably wrong on the numbers, but it was, I'm not going to quote the numbers because I can't remember, but the number of people that came into the emergency room more than 25 times in a year. I mean, amazing. And I asked the question, is it because these people, they just don't have any insurance? Is that why they use the emergency room as a doctor's office? And they said, no, the majority of them have, maybe it's Medicaid or Medicare. I mean, they have some type of coverage. It's just that's their means. They don't go to the doctor. They come to the emergency room, whether it's a hangnail or something. They don't go to. It's very, very, very expensive because I thought, well, maybe this will solve some of that problem to reduce healthcare costs.
Right.
So we're not. There's so much uncertainty, and we are seeing the rate increases. People that cannot still afford these premiums, they need to remember they're going to get tax credits back. So they aren't going to have to pay the full premium amounts. That's really important because a lot of people, when they see these numbers that are being thrown around, and I've heard all ranges of numbers for the health care, depending on which policy you pick, they will, if they can't afford it, they do get credits back. The ones that can't afford it will not, and they will be paying penalties in 2014 for not getting the health care coverage.
Mm-hmm.
And so we are seeing that.
And from what I gather too, it depends upon where you live too, in terms of not only the policies that are out there that are being offered, but also in terms of your rate. It is determined by your community area.
Absolutely, the health of the community in
Yeah.
general. You know, when you hear about these cities that have taken on, you know, obesity to try to reduce, and it was actually interesting because I was working with Stetson, and they were doing one of their projects. They were doing was an issue on companies that require physical fitness of their employees. They don't allow smoking. They have a smoke-free campus. They have weight reduction, body fat count, and whether or not that's an invasion of rights. And it was very interesting. And the students were researching, and I gave them a whole list of companies that we have in town that are being very progressive with that.
Yes.
I mean, we've got gyms. They have gyms on campus and personal trainers, and they have smoke-free campuses, and they have all of these different things to try to reduce their healthcare cost, because they know whether that's a microcosm of this community that as a whole. We see the state exchanges, all the different states. Let's say, was it 36? I think states put exchanges in. So those will be more localized rates. Whether the federal exchanges, absolutely, we are seeing all of those premiums being impacted by which state you live in, what your income levels are going to be, what your benefits are going to be, and it is like you said, we're just kind of hitting the iceberg. What I think, what I want the listeners to understand is that at this point it's very important to at least go explore, look what your options are, talk to your insurance company, talk to your employer to see what you have there, look at what go on the websites. There's a couple of different other websites too. There's the official government one, but I've heard of some other websites that are out there that will also walk you through. Some private people went through when the healthcare one, and they did what they do. They know a code, and they went in and they took the government website and created their own out of that. And so it's been there's been a lot of news articles on it, and it was pretty interesting to see. It intrigues me to see how you get the entrepreneurial spirit. Like, oh yeah, I can fix this.
They say this something that's the invention, but whatever.
Yeah.
But there are also community organizations. I think the Epilepsy Foundation, Halifax actually has people who are trained to also help people in finding, where they can get the health care coverage that they need, and especially those that are going into their emergency rooms. Once they go there, they get the treatment they need or whatever, they're talking to them about signing up for health care, because they know that they're using the most expensive form of health care there is, going into the emergency room.
Right, and like I said, when I talked to them, I was actually surprised at the number of people that are using the emergency rooms have health care, but they just, for whatever reason, that is just not. They're so accustomed maybe to not having it at one time. It's going to be a whole training. It's going to be, and the hospitals have done a fantastic job. I mean, it's interesting because the hospital's best thing they can do is put themselves out of business. Their best thing that they can do is keep people healthy. It's kind of, if you think of a business model, it's kind of an interesting business model. Their job is to keep you out of the hospital.
Right.
Because if you don't, if you can stay out of the hospital, it was actually interesting, even things they've told me, that where if there's a patient that is in the hospital for a heart attack and they leave, and let's say they're walking across the street and they get hit in a horrible accident or something, and they come back in the hospital, the hospital doesn't get paid for that patient when they come back, because it's considered a revisit.
Right.
Unless they can absolutely prove that it had nothing to do with the original. So I don't know if that means they don't let people go, and those kinds of stuff. I don't know. Yeah.
And that is true for repeats for the same thing. They do not get paid, so they have to make sure that they do as much as they can to get the person healthy before they discharge them. And I've found too. There are a lot of people who forget, I think, what was happening with the health insurance industry, 3-4 years back, because there was still an uncertainty that was tied into the system, because employers didn't know from one year to the next how high it was not going to go. Not whether it was going to increase, because it was going to increase, but how high was it going to increase in terms of healthcare coverage and what they had to pay. Now they've got a different kind of course, uncertainty that's tied into it all, and all that uncertainty just seems to be feeding on itself.
Well, and I can tell you, I can use our example in our firm. Our insurance policy renews January 1st, our healthcare policy, and we are sitting here today without quotes for January renewal. We had to do enrollment by December, I think, 17. And we today do not have quotes. Firm quotes from the insurance company, from our from our insurance broker for insurance. Now, I'm probably going to get calls tomorrow from some friends I know that say, "Well, wait a minute, we can help you," and and they keep coming back and saying, you know, we don't know. They're waiting to the absolute last minute because as this tax law is evolving, uncertainty just creates so much chaos. Whether it's uncertainty about healthcare or tax rates or the economy, and I mean that's the biggest thing that I think I see. And with some of the stuff that we see that's been going on right now with the government shutdown and all this, it just,
and a looming another one for next year,
absolutely. And everybody's like, what's the impact going to be? I can tell you, from a tax standpoint, our tax filing system, the IRS is 2 to 3 weeks behind now.
I heard that. Yeah.
So we won't even be able to file tax returns probably till mid-February. I mean, think about how many people file tax returns in January to get their refund, so that they can, you know, go do purchases. New car purchases. I mean, one of the biggest months is like late January, February, because people are getting their IRS refund that use the IRS. The withholding is kind of a savings account. They always kind of count on getting that big check back in January or February to pay off their Christmas bills.
Right.
We had clients that filed during the shutdown. During the shutdown, there was a tax filing deadline, October 15th. It was the last day to file tax returns. Now, remember, the government shut down on October 1st and reopened until the 17th, I think it was. So for 15 days, we couldn't get any information out of the IRS because they were shut down, but we were required to file tax returns by October 15th. Now, luckily for most of our clients, we keep power of attorneys on file with the IRS, and we can go online and we can get the information. So I had closings that were held up, clients that were selling and closing, and they couldn't close because the banks couldn't verify their IRS information, their tax information. So we're seeing the snowball effect of some of these things that are going on that is causing so much uncertainty for government. And anybody out there trying to manage their own personal finances knows if you don't know what you're going to spend down the road, it is very hard to make a good budget decision. And so we are definitely seeing that with the healthcare and kind of the overall tax, the whole tax environment right now is what we do know for certain going up. Like I said, on average, our high income individuals are paying 10% more this year than they did last year. And you know, most of them we're looking at them paying somewhere around 42% of their income. I mean, that's a pretty big number.
Yeah, that's a big chunk.
Yeah, they say there gets to a point where people say it's not worth it anymore. And
or you get more of that, what do they call it, under the table
the
type
underground
stuff. Yeah,
the underground, and there's a tipping point as to when people just say this is too much and they're just not going to report it, and then they don't get anything from that. And what I got people saying is it's just not worth me working that hard. If I'm going to end up starting to give 50% of my income at some point to the government, and most people say it's because they don't. I've had people say if I knew that if I paid this it would pay off the deficit and we would be even, they would do it. It's because people are not confident that their money's being spent the right way, and that's really, it's a lack of confidence and or maybe a lack of control. I can't control how my money is spent.
Right.
You know, some of the things that I hear clients say to me is, well, you know, when it comes to contributions, you know, they say I want to be able to control. I want to make sure the people can, that get the money are worthy of it. And we see that. All our nonprofits are really being hurt by contributions, but you see fundraisers, you hear somebody's sick, think about how many fundraisers you hear for that person.
Oh yeah.
Everybody is willing to step up and help somebody. And I got, you know, they just said they're not willing to help to pay. They'll pay their fair share, but nothing more, because they don't feel like it's really being used appropriately, or maybe how they would use it. Maybe it's just a difference in philosophy on how they would use that money. So it's a very difficult time. I know when I talk with clients and we start saying upward of 50%, they start shaking their head and what's it worth? Why should I take the risk anymore when I'm going to lose half of it in taxes?
Now, do you hear of, because you do have commercial accounts as you do regular individuals, but do you hear more and more businesses saying they're just going out of business?
Yeah, most of them, at this point, the survival of the fittest, unfortunately, most of the people that are in business now are going to survive. I really don't, I mean, we lost some clients, they went out of business, they closed up, they sold, you know, a lot of different merged, just, we definitely saw that.
And was some of that tied to, because one of the things I'm a believer of, and I saw this in management, during the time of, let's say, high unemployment or a lot of bad stuff happening in the economy, it's the perfect time to make changes that you want to make, to do the things that may have been in the back of your mind or even as a part of the drawing board, on the drawing board, you know, worst case scenario maybe. And so it becomes kind of the perfect time to make that change, to maybe consolidate, to maybe let go of employees that you wanted to let go of for some time or whatever. Do you think any of that happens?
Oh, absolutely. I mean, it's,
I mean, it's wise business, really, when you think about it. Yeah.
Well, and I would have to say, well, you know, the early 2000s up through the height of the market, 2006, you know, we don't want to admit it, but we got a little bit, you know, fat and happy. I mean, we got comfortable, things were great, and we didn't sharpen the stone. We did not sit back and say, do we really need to spend? And that's why you saw the unemployment. That's why you saw the scale back, where people weren't buying. I mean, people cut back. I always have a hard time because I'm a big believer in saving. I'm a big believer in the 6-month reserves and all of this. And I hear people say, oh, you know, people need to spend more. And I'm like, well, wait a minute. No, isn't it good? Aren't we supposed to be teaching people that good financial management means having some savings? And I know it's contrary to growing a robust economy, but I think in the long run it's robust. Yeah. But I kept hearing, well, people need to spend and they need to get in debt, and I'm like, no, that's what got us here to begin with. I don't want to go back. I want to let's be smart about it. Yes. And let's clean up our finances. And that's what the businesses did. They took a look back and said, well, do we really need this? And yes, it wasn't an excuse. Should they have done it all along? I don't know. But some of them needed to do it. Some of them went out of business. I mean, their business model didn't work, or it was difficult. And at this point, really we've been dealing with this since 2007, 2008. At this point, if we're getting into 2014, if your business isn't gone through some type of recovery, and if you're not making money now and being able to sustain, then you really have to look at your business to say, you have to know how to be able to make money in this environment, because this is what it is. This is the new norm. This is the new normal. It's not going to go back to double-digit growth years. I personally don't want it to go back to that. It's not healthy. It's not. You know, I mean, some people are going to make much money. There were people that made money out of the recession period. Yes. So you know, I want good, strong, stable growth where we're growing organically. I think, unfortunately, the small business has been hit the worst because the number one financing for small business people start friends and family, that's of course, but home equity loans and credit cards. Well, home equity loans are gone. And you think about how many, if you talk to some people, when you go back and say, how did you start in business? Where did you get your money from? Most time, home equity loan, friends, family, credit cards. I see it, you know. And that's just not out there anymore. And the traditional means, if you can't go to a bank if you've never been in business and it's very difficult to get some money, the money out of a bank. You know, that it's just you don't have the financial history, you don't have the business knowledge and all those things. So it's true that if you want to get money from the bank, you got to have money. Well, you got to have something. Pretty much. Bankers are going to kill me out there, but yeah. But I've been at meetings and that's what they've said, and they've agreed that if you want to get money, you have to have money, because those are the people that they can depend upon to come back and be able to actually pay for whatever that loan is. Well, not only that, they're being regulated now. I mean, look at the regulations that they have on them that says no, they have to meet these credit standards. So I mean, the banks are only doing what they're being regulated to do, is to say no, you can't make those type of loans, because if you make those type of loans to those people and they don't pay you back and you get into trouble, we got to bail you out. So we're not going to let you make those loans. So it's, I mean, I've seen it. I've talked to bankers and I even just some of the things I've seen with going through some financing, and it's just kind of crazy. I feel bad for my friends in the banking community because they're frustrated.
Yes.
And they say, their hands are somewhat tied. They just they can't. The regulations were put in place to say you can't do that because you can't make bad loans. So
and it's based on the history of what happened, what we went through, and sometimes, you know, some people say the government overreacted, has overreacted, and made it more difficult for people not just to get into that kind of a situation, but made it more difficult for them to even try to get out of that situation. In the last, 5-7 minutes we've got, what is it that, what are some common recommendations that, or general recommendations you guys are making to businesses and individuals as they prepare for their tax year?
Well, we're coming up on year end, so for our businesses, we're always looking there are some tax provisions that are expiring at the end of 2013. Will they be renewed for 14? Your guess is as good as mine. Just buying equipment and furniture equipment, vehicles, that stuff. There is a bonus depreciation where you can write off half of it that you bought if it's new. That expires at the end of 2013, so we still have 25 days left to, if you need to make a purchase of a piece of equipment. And I tell clients, don't spend $1 to save 40 cents. You're still out 60 cents. But if you're going to buy something, instead of buying it in January, buy it now in December, because if you buy a piece of equipment for $10,000 right now, you may have to only be able to write off $2,000 a year if it's a 5-year life. Under this law right now, as it stands, you can write up maybe $5,000 in year one, plus take the remaining $5,000, so you get like maybe a $6,000 deduction in the first year. Even in some cases, you might be able to write off 100% under a special election, and those things are expiring at the end of 2013. Will they be renewed? We don't know. So that is something for any of the businesses out there that are potentially looking at buying. They can do that. The other big thing, and this applies to businesses and individuals, is to make sure that if you, because the way the tax brackets work, and I always forget until I have to repeat this to a client, is if you go into a higher tax bracket, it's only that dollar that goes into the higher. So let's say that you pay tax at 15%, and then you start making money, and now you're in a 25% bracket. It's only the money, the additional money that you pay 25% on. You still get the benefit of the 15%. So it's a graduated rate. It's not like every dollar you make now is taxed at 25. It's only the incremental dollars.
Oh, okay.
And a lot of people don't realize that, and I forget that. When I say, oh, you're going to be in a 25% bracket, they're like, oh, no. And I'm like, no, it's only the dollars that you're making now. So our tax brackets start at 10% up to 39.6% now. And if you had $100,000 income in 1 year and zero in the next year, you're going to pay tax probably at a 25% bracket on the $100,000 in year one, and year two, you're not going to pay any tax because it's zero. But if you were to take that $50,000 between the 2 years, you may only pay 10% both years. So you just were able to change $100,000 at 25% is $25,000 versus 50 at 10% for 2 years is only going to be $10,000. So just by able to keep from having peaks and valleys in your income, and this isn't for everybody, because if you're an employee and you get a standard pay, you can't necessarily be able to figure out, allocate your income between years. But the extent that you can keep your income normalized, not have big peaks and valleys between income, because of the tax brackets, you're much better off. So if you're going to sell something, don't sell, if somebody's got stocks or something, don't do a bunch of it in 1 year. Spread it out over 2 years if you can. So we look at that. That's something we look at with clients to say, is there an ability to, if you're going to get a bonus, can you pick which year it's in? If you do, let's decide which year is the best year. Because maybe something else is off 1 year. So we look at those type of things. Tax rates are not going up in 2014 and the same as 13. So any income we can push into 2014, you get a whole nother year to hold on to that money. So last year when I was here, I told you we were trying to get income into 2012 and not 13 because we knew the rates were going up. So now we're in a situation where we're back to normal, where the rates are the same for 13 and 14 as it stands right now. So we are telling people if you have an ability to push income off, unless it's going to throw you up in a really high tax bracket, see if you can push those items off until 2014. Gives you a whole nother year to hold on to that money.
Mm-hmm.
So we look at those type of things. If you have anything that's different or unusual, seek some professional advice. We live this stuff every day long, every day. And I often have clients, and I had a client that was a flight instructor, and he always said to me, I should know this stuff. I should know this accounting and this finance. And I said to him, look, I said, you don't want me to try to fly that plane. So, we've gone through years and years of college and continuing ed. I spend 100 hours a year at least studying the new laws, and it's what I do all the time. It feels like 24/7. It's not, but so just as other people, and I say, it's so important. Do what you do best, and seek advice to make sure that if there are opportunities to be able to reduce your tax burden, sure, why wouldn't you? I mean, everybody, I know we want to support the government, but I haven't met too many people that don't want to pay any more than they absolutely have to.
Oh, wonderful. And you've covered that, and we still have a minute to spare. So I better take the time. Yeah, he's here. Just to say to everyone, thank you guys for listening. You've been listening to Truth with Gwen Azama-Edwards, and my guest is Suzanne Forbes. And Suzanne is, again, partner, CPA. You still manager?
Managing partner.
Managing partner, okay. With James Moore and Company. And as I said, they're a great community partner, but they also know this stuff, okay? And they deal with local governments, and municipalities and the like, but they also help commercial businesses and individuals. You correct me on that the last time, so I may end up coming to you guys. But they are great, and the information she shared again is just the tip of the iceberg, because there's so much, as I'm sure you guys know, that goes into this. And we talk about uncertainty, but there's also uncertainty when it comes to the income tax laws and rules, and people talking about dumping it, throwing it out, and all this kind of stuff. Who knows? That won't happen in time for this year, guys. No. But maybe next year. But again, you've been listening to Truth with Gwen Azama-Edwards. As always, go to the website www.gwen-truth.com. Until next time, be sure to be informed, to be empowered, to stand tall for that which is right and truthful. Again, you're listening to Truth with Gwen Azama-Edwards. Again, my guest, Suzanne Forbes, James Moore and Company. And until next time, hey guys, just be blessed and have a great week.
I was watching the clock over there. I can see the time.
Yes,
I can see the time.